This is from Markets.com, and today is Monday. Ladies and gentlemen, it's the start of a new week and probably a new crazy week. Now, we do have some important economic events on the economic calendar, and most likely it's going to be the week for the BOC and the ECB. But let's not forget that there's still drama coming out of the White House, and in a way, let's be prepared for it, right? So, look, about all this and a little bit more in my webinar, so stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. Okay, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the global market analyst here at Markets.com. And let me fix my camera a little bit. There we go, a little bit higher. So, ladies and gentlemen, I hope you all had a fantastic weekend. I hope you're all feeling nice and refreshed after a very crazy week. But I think that there's going to be another one in front of us. Look, it's going to be a short one because, again, on Friday, it's the Good Friday. The Christian world is celebrating Easter, upcoming Easter, and yep, the markets are on most of the major most major indices are not going to be running, let's put it this way. Yeah, that's going to be on Friday, but so that's why we have to fit everything into 4 days. So we'll look into all that. Before we jump any further, let's have a quick read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. You can basically do that right now. I'm not going to disappear anywhere. So yeah, look, I mean, we had honestly like a very volatile week last week, and this one I think that's going to be finally there is going to be some very important economic data that is coming out. I'm not saying that the previous week did not have any important data, no, but it's just that, you know, that the strength of that data could be a little bit, you know, something that actually could move the market. So not only the drama from the White House. So look, also, just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, listen, the first one I want to pick up here is Japanese Nikkei225. And look at this. So, in general, I said to you last week I talked a lot about this index, and I do like this index, and it's very technical. I mean, and look at this. I mean, after we broke this 35,111 territory, we traveled lower. We tested the area here near the 30,375 zone. We rebounded from it, pushed back up to, I mean, everything is like boom. Everything is like really like working like a charm. So what can I say? If you're looking for some higher levels, I think that you need to wait for a push at least above the 35,111 territory, somewhere here. But I should say that the bulls should not get their hopes up yet, because again, there are many obstacles on the way higher, which could be a little bit in the way. So for example, we could keep an eye on, we could keep an eye on this little hurdle, this 36,466, but let's not forget that maybe, just maybe, we could see a nice good drop here below this downside line. Let me just change the colors here a little bit. So we could see a test of this downside line, which is basically taken from the highest point of January of this year. So basically the current highest point of January of this year. Yes, this is from where we're drawing this downside line, and I get it. It's a little bit on the tentative side because we have only 2 touches, but nevertheless, we'll keep an eye on it, because again, that could be a little bit of like a stopper here before, let's say, hitting you know, maybe even higher levels. But again, with the higher levels, unfortunately, that's a problem right now. We know that Japan is in talks with the US. I mean, they're trying to get a deal. I mean, they're trying to maybe like reduce the amount of tariffs. We know that the tariffs have been paused for 90 days, and that's why the market rebounded. But still, I think that this is what they gave, you know, that it was deliberate so that the US could get something out of it. So yeah, I mean, okay, look, I mean, now everybody's going to be traveling to the US and in order to get a deal, so some sort. And okay, look, I mean, we'll see. But I would say this way, that it's not only that, it's damaging the economies of those exporting countries, but also the main importing countries getting damaged. I'm talking about the US. So I mean, they're suffering, they could be suffering as well in this. Again, it's this is what politics is all about, and it's only us that kind of are suffering all the time. But anyway, look, for now, like I said, I'll take it easy here, and if I'm looking at some lower levels on Nikkei 225, I do understand I'm going to be missing out on a lot of territory, but honestly, I prefer to wait for a drop below this hurdle here, below that 30,370 zone, because if I can get that move, a forthcoming lower low will be confirmed and potentially attracting more sellers into the game. So yeah, let's keep an eye on that one. In terms of Japanese data this week, let's have a look. Monday, we got the industrial production already. So yep, that came out. Let's have a look. Month-on-month figure higher, and a year-on-year number on the lower side. Okay, a little bit mixed numbers. Let's jump into Tuesday. Let's see what's happening here. Nothing major. Wednesday. I think that, yeah, machinery orders, okay, nothing major. Thursday is going to be the trade balance. Now that's something that I'm going to be keeping a close eye on, because again, look, the trade balance has been improving in a way recently. And it's going to be interesting to see if we can actually remain in positive territory. Because look, after such a drop in February here, then the March number here came out very nice. Let's see if we can stay in positive territory. Something tells me that there could be another decline, but again, let's not rush into conclusion. And Friday, when most of the markets are going to be closed, Japan will be delivering their inflation number. So at the moment, I don't see any expectation here on the on TradingView economic calendar. Let me just double check something else here. If there's any data. Okay, the year-on-year is expected to remain somewhat around the same, 3.7. Okay, but the core year-on-year is expected to decline by, increase by this. Okay, let's have a look, because if this is gonna increase, if inflation is gonna pop higher, well, we could actually see the Japanese yen continuing to drift nicely to the upside. But I'll jump into the Forex world in a bit, ladies and gentlemen. So first, let's deal with the indices. The next index I want to deal with is China50. So China50 seems to be okay, seems to be surviving nicely, because again, I think that there are some pauses on some of the goods, and there are actually talks. And let me just there are some, like I said, there are some exemptions, let's put it this way, that potentially electronics could be exempt from that steep tariff on China. So in general, at the moment, let's put it this way, it's they've applied tariffs on all these goods and everything. They slammed each other, on publicly to make a show that that they're here. We're gonna hit you with this. We're gonna hit you with that, and now the exemption part starts. A few weeks ago, a couple of weeks ago actually. Trying to remember, where was it? Was it like on YouTube that I threw out this idea? There we go. That was on the 10 days ago, right? Tariff exemptions. So this is what I started talking about, and they said that, look, they can do whatever they want publicly right now. They can shout the loudest, but in general it goes back to money and to trade, and it's gonna hurt both sides. So and that's why, in order not to kind of fall in the eyes of your most kind of or biggest supporters, you kind of start underneath, under the table. You start negotiating these little exemptions, and to be honest, I mean, I'm not going to be surprised if the exemptions actually then exceed the amount of industries where the tariffs are applied. So the full tariff is applied. So that's what I'm saying. So at the moment, let's continue monitoring. And again, China is doing nicely here. But looking at this from the technical perspective here on the China 50 index, we're approaching this downside line taken from the high of the 20th of March. So in a way, there is actually, you know what, is this gonna be better? Yeah, probably this is gonna be better. So we're keeping an eye on this downside line here, which is taken from the highest point of March. And if this downside line continues to provide resistance, then another decline is possible. However, look at this. I mean, if we break the downside line, it opens the doors to some higher levels. But I'll say it this way, that the EMAs here, that's the clearance that I need in order to get a little bit more comfortable with higher levels. That's what I'm going to do right now. Let's, in terms of Chinese data, again, Monday trade balance came out. Let's have a look. Kind of not bad, I would say. Yep, the forecast was this, but okay, it came out on the lower side. The prior was much better, but yeah, it came out on the lower side, but still better than the forecast. In terms of Tuesday, not much. Wednesday, let's have a look. We're having the GDP growth rate. There we go. Some action, and let me just check the check Thursday. Nothing major. So the best moment here for China, or I don't know, depends on the outcome probably, right? The best moment, the best economic data from China will be getting from on the third. On Wednesday. There we go. I think I have way too many words pouring into my head right now, and all the words that I really want to deliver, and this is what, like, you know, I'm starting to stumble a little bit. Anyway, your GDP growth rate. So at the moment, the expectation is for a little bit of a decline. Now, industrial production is expected to decline as well. Retail sales are expected to improve a little bit. So let's see how this is going to play out, of course. But again, with the retail sales, maybe this is where everybody's kind of jumping into buying, you know, like, because again, before tariffs kick in, and this is data for March, if I'm not mistaken. Let me just double check very quickly. Thursday, Wednesday, yeah, it's going to be retail sales March. So basically, it seems like everybody was expecting kind of, you know, those tariffs to kick in, and that's why maybe that's why the retail sales are expected to jump a little bit. Let's see, of course, but GDP, that's what I'm looking at. I'm really looking at to see how, you know, if we can come out the same. Higher, let's say the same at around 5%. If there is a little bit of a hint of a slowdown, then yeah, of course, then this is where the market could react a little bit negatively. But if it continues to balance around the same 5.1, 5.4, this could actually show that actually maybe this could help China attract even more FDIs and foreign direct investment into the country, because again, it's at the moment it seems like it's showing a little bit more stability than, you know, than its other major counterpart. So long story short, for now, we're watching this data very carefully. We're watching the index here, the China50 index. So let's see if we can break this downside line. Let's jump into the US, ladies and gentlemen. We had a beautiful recovery on last week. In the second half of last week, we pushed above the 40,000 zone. We currently remain above the 40,000 zone, but I have to say that, yes, and this is what I said to you before, that if we do pop above the 40,000 zone, I'm leaning towards the upside, but only up until this downside line, taken from the high of the 20th of February. So this is what I'm keeping an eye on. And if we are, you know, at the moment, yes, the short-term analysis for me is more maybe to the upside, given that we had some you know, positive rumors as well from, you know, in the headlines that there could be negotiations, and maybe you know, electronics could be out of the could get the exemption. However, the problem still remains, because what the next problem is right now, that big pharma is going to get hit, because they're going to have some tariffs on them. Basically, the new administration wants to put all the, you know, make the goods produced in the US. Again, it's a really long shot, of course, but okay, let's see how this is going to play out, of course. And another thing is that there is a big investigation of tech, if I'm not mistaken. Yep. So we're seeing basically that there's going to be a big investigation of the semiconductor sector. Right. Okay. So we cannot really stop there, right? So there's gonna be more stuff to come. Um, okay. Let's put it this way. At the moment, we're getting a little bit of a recovery. That's absolutely fine. But what to say here? This could really all backfire again if we suddenly start seeing, oh, we're gonna do like major tariffs on semiconductors, and we're gonna we're going to impose like tariffs on these and that, like on pharmaceutical companies. So if that's the case, then let's say Eli Lilly, right? So big pharma, this, I mean, it's already getting battered, right? I mean, this, let's say Eli Lilly, yes, they have probably good drugs and everything like that, but at the moment, everybody seems to be falling under the same scrutiny. And another company that probably could fall under scrutiny is this one. Yes, it's recovering. Yep, okay. Fair enough. Good for it. Good for Nvidia, but let's put it this way. I mean, I'm expecting this one maybe to correct a little bit higher here, but is this going to be very, am I very positive on Nvidia? Do I think that this is a good time to jump in? Let's not forget that it's going to have its. We're currently in this earnings season, but okay, for Nvidia, it's going to be a little bit later. We're having some financial companies they're delivering earnings this week. So, but Nvidia it will be only at the end of May, so at the end of spring, basically. Look, what can I say? For now, there is a chance for this one to push higher a little bit, but we have an obstacle here, or a few obstacles are which are the EMAs. Now, I do understand that we need to look at the fundamentals, not only the technicals. I mean, in general, is the fundamentals have the priority before we just with the technicals we just support our fundamental analysis. So at the moment, yes, the company is not it's not bad. However, I think that there are some fears that, like I said, the semiconductors are going to get hit, and I think that that's where it could all go down the drain for now. Let's see, of course. Let's see what's going to happen with Nvidia. So coming back to the indices, yes, I'm leaning a little bit more towards some upside, but I'm not getting very bullish. For me, the bullishness will be if we do clear this downside line, we push above all the EMAs here on the daily chart, and then we'll go from there. The S&P 500, similar story. Nice little retracement here we're getting, but again, at the moment, it seems like a little correction before another possible leg of selling. So that's what I'm going to keep an eye on for now. And if we do continue to trade below the downside line, I'm continuing to lean lower. For me to consider an upside scenario, a break of this downside line is needed, but not only that, a break above all my EMAs as well. NASDAQ 100. Now this one's a little bit on more shaky grounds. However, it's closer to this downside line. Let's see if we can break that. But the thing is, I prefer, again, the same story. I prefer to wait for a break above the all the EMAs here on my daily chart, wherever they're going to be. So the first step is going to, of course, is to keep an eye on the on this downside line. But then I prefer to, like I said, I prefer to keep an eye on the this barrier right here, the 19,250. So that's the high of last week. And if we can clear that high of last week, then this could in a way open the door to towards some higher areas. Looking at the dollar index, now this one's getting destroyed and it continues to get destroyed. And look, the dollar kind of is losing its status of a safe haven, right? I mean, because you're not jumping into the US dollar. On the contrary, everybody understands that with these measures that are currently taken by the current administration of the US administration, that those are kind of really not helping the US dollar, just because, again, if you're gonna push everything into the country, you want to try to make everything inside the country you need a, and then you're gonna, let's say the intention is to export it, you need a cheaper dollar in a way, right? So you cannot like have a very high dollar and just be attractive on the global arena. No, that's not going to happen. So you need to devalue the currency, and so far this is what we're seeing. So we fell below the 100 mark. I talked about it. This was my target last week, but then I said to you, look, I'm gonna aim for some lower levels. If we do clear this upside line, we clear some of these 99.85, 99.24 zone, and the most important, we clear the 99.24 zone, which is the lowest point of July of 2023. And if we can clear and we can stay below this area, below this 99.24, then yep, I'm gonna continue just aiming further south, ladies and gentlemen. That's kind of it. So we do have some important targets underneath here, like the 97.70. I think that's, or somewhere around among those lines. So yeah, around 97.70, I think it's a very nice target. We can keep an eye on that one, but then of course we can also keep an eye on some of these areas. It's not, let's say, picture perfect here, but again, 90, 97, 96 territory, I mean, yeah, that's something to keep an eye on. But the first one that I'm going to aim for will be the 97.70. The German index DAX, looking good here. Now look, the European data, we're gonna get some action, and this is what I said this in my heading of the this webinar, that this week most likely will be Canada's and EU's, week, because again, both countries, both central banks of both countries are delivering their interest rates. Now Wednesday we'll have Canada, we'll have which will deliver the interest rate, but before that, Canada will deliver its inflation number. So that's going to be on Tuesday. So Wednesday, their BOC is delivering its interest rate decision. On Wednesday, we're going to get the inflation numbers. Now, with the ECB, Thursday is going to be that day when they will announce their interest rate decision, which currently is expected to drop again, going by 25 basis points. So all this is done in line with the idea of supporting the stock market, in general, the economy. Yeah, on Wednesday we'll get the CPIs, the EU CPIs. Let me just double check that very quickly. So yes, there we go. CPI final inflation rate year-on-year final headline. The expectation is for a decline. So in general, you would say, if the inflation continues to decline, yes, the central bank is more eager to go and cut. And given that at the moment the US dollar is enjoying its downfall, I don't know if the word enjoying, I need to put it in brackets. And if the US dollar is drifting lower, then of course the euro is finding good strong grounds. I mean, it looks not bad against the US dollar. It's pushing higher, and that's why it's a perfect opportunity for the ECB to continue cutting, because again, yes, there could be a correction back down in the euro. However, it's still strong against the US dollar, and just because the way everything is shaping up, so it seems like the ECB doesn't need to worry about weakening euro, because again, it's just everything is working out automatically, and just I don't know, like if I can use the word nature here, naturally, but it's not really natural, it's all man-made, but all these issues are man-made as always. And that's why for now, like for now, I think that the ECB can afford to go and cut rates, and most likely they will do, and it seems like that it's on course. But of course, it's interesting to see how much more are we dropping the rate all the way to the 2%, or what's the case here. So that's what we're going to be listening into the press conference after the rate announcement, like half an hour later. So yep, keep your eyes on that, and yeah, let's see what's going to happen here. But at the moment, yeah, the expectation is for a decline. I'll jump into the euro in a bit, but looking at here, DAX could have support, could find support. We could see that push higher, but the same story as with other indices. Look, we have some downside lines here, tentative ones. So for example, this one here, yeah, we have declined. This is here. I'm measuring how much we have declined from the top, from the peak of this year, and we dropped around 11%. However, from the beginning of this year till the peak, we have done we around 18 or almost 19%. So we're still in profit. We're still in positive territory for the year on DAX. Let's see if we can stay like that. Let me just actually mark this line here. This is the opening area. Yep, 19,771 zone. Let's see if we can, if we can continue to trade above that area for this year. Let's jump into, finally, in terms of indices, let's jump into FTSE 100. FTSE is, yeah, it's look, first of all, I want to get rid of everything, I think, and start fresh. Let's do that. Remove all the drawings. So overall, what you'll see here is that we remain below all the EMAs on my daily chart. So that's kind of a little bit of a bearish indication. So in a way, any move, any pullback here all the way up until these EMAs, if we struggle to overcome those, then I would say there is a chance for this one to move back down again. For the upside, I'm going to take a very conservative approach here, and I'm going to wait for a break of this downside line here, taken from the highest point of March. And if we can clear that downside line, amazing. I will consider some higher levels, because at the same time we could clear all the EMAs, and this is how we could attract a few more buyers into the game. But let's have a look at the VIX. VIX is stabilizing, so I think that, yeah, I think we had our moment of high volatility this month. I think that yes, it was a good spike here. I think we're getting back to normal a little bit. So let's see if, how far. I mean, maybe it could shift back up a little bit, but will it surpass the 44 zone here or something? How much was it? 40? Yeah, 44. Will it surpass that one? This month, no. But next month, maybe we'll see. Let's jump into the Forex world, ladies and gentlemen. AUDUSD, let's have a look at this one. Of course, enjoying the moment. What a V-shaped reversal. Look at this. It's just one-way traffic. People are, short sellers are really struggling right now. And to be honest, I will say it this way, that there is a very good chance we could go higher on this one. So first of all, this idea is working out. I talked about it. I said that if we stay below the upside line here, there is another chance of a decline. But if we climb above this upside line, then yes, I'm aiming for the 50-day EMA, or then the 100-day EMA, and then so on and so on. But again, for now, let's go slowly on this. AUDJPY is also at an interesting spot here, and look at this. I mean, we did retrace, of course, risk on kicked in, everybody's happy with that, but this 90 mark, I think that's the psychological one, and we're currently oscillating around it, so it's not really helpful. But I can say this way, that if we continue to trade below it, I'm still leaning towards the downside. And NZD USD, this one is doing better than AUD USD, so I'm assuming AUD USD, yeah, AUD NZD is drifting lower, but we're holding above this 1.0720 zone. We cleared it a few times, but we're still struggling to remain below it. So look, NZD USD is showing us the way. It's showing us that it is strong, but is it, or or is it just because of the weaker dollar, US dollar? Well, let's have a look at what's happening in terms of economic data from New Zealand services. PCI, okay. Nothing major here. Food inflation. Now that's where it's going to be interesting to see tomorrow. So far, it has been rising, and look, it has been rising, and I think that this is where the RBNZ will have to jump in again, and maybe like to do more cuts or something like that. We'll see. Again, if this continues to strengthen, I think that, okay, on one hand, it's great. Maybe this could help out the local consumer temporarily. But if food inflation is, pushing higher, then it's not really, yes, you're getting a stronger currency, local currency, but it's good for travel, but in terms of being domestically, it could be some issues. Now let's jump into USDJPY. So far, so good. According to all the TA rules, everything is working out nicely. I talked a lot about this last week. 144.55. I said that if we do clear that one, my next target is 142, and then we'll go from there. My next target after that is the 139.57. Now, look, of course, the psychological 140 is in the way here, but let's not rush into things. For now, let's go slowly on this. If we do clear the 142.06 territory, I will go further south. US dollar against the Canadian dollar. So of course we're watching this one very carefully. The Canadian dollar is really getting stronger against the US dollar because not because of oil, not because of the BOC. It's just kind of naturally happening because of the US dollar. And look at this. I mean, this Canadian dollar is, like I said, this pair is approaching this 1.3822 territory. I talked about this one. That's the lowest point of November 2024. So far, I mean, what I'm expecting is maybe to see something like of a little rebound here. I'm not saying that I'm going to be very bullish or anything, no, but I want to see what's going to happen here. If we can rebound, great. Maybe a little bit of a retracement back up could be possible, but if we clear it, I mean, wow, that's opening the door to some lower levels. But you know what? I'm looking at it right now, and I'm thinking that maybe, just maybe, this could be the next potential target, the 1.3750. So let's keep an eye on that one for now. I'm going to aim for this one for now. 1.3750 will be the next target if we do drop and stay below the 1.3822 zone right there. And don't forget, as always, like I said, don't forget that on Tuesday, tomorrow, we are getting the Canadian inflation number. So if the Canadian inflation number comes out here, let's have a look at it. The year-on-year number is expected. Oh, there's no expectation. Okay, what's the core? There's no expectation. Wait a second. Wait a second. Let me refresh this. Is this for real? There's no expectation or something? Let me just have a look. Yeah, there's no expectation. Let's have a look at the other calendar. Okay, year-on-year inflation number 2.6, expected to come out at 2.8. So this one here is expected to come out at 2.8. However, the core inflation, the year-on-year one, is also expected to come out at, okay, both of those are expected to come out at 2.8. Right, it's interesting. So look, what can I say? For now, the inflation is expected to come out on the higher side, and if it does that, then you know this is where the Canadian dollar could strengthen a little bit more. But you know what I'm saying, what I'm looking at, what I'm thinking. I think that this is already fueled by the fact that the inflation is expected to come out a little bit on the higher side. So not only that the weaker US dollar here is playing out, it's also the expectation of the inflation coming out higher. So if it comes out somewhere on around the same level at 2.6, for example, 2.7, I really doubt. I think that maybe we could see a little bit of a rebound here. Let's see, of course. But again, the question is, are we going to rebound from here, from the 1.3822 or the 1.3750? Well, at the moment, I am just observing the price action. I want to see what's going to happen here first, and I'm not going to rush into things. I'm going to wait for the Canadian inflation numbers to come out, and then I will wait for the BOC interest rate decision on Wednesday. Let's have a look at the US dollar against the Swiss franc. I mean, this is just, oh my God, honestly, this is just spectacular. Look, it's going to be a good buying opportunity when, unfortunately, it's unclear because this is just, wow. Look at this. This continues to slide. Of course, everybody's jumping into the Swiss franc against the the US dollar here, and just very quickly the battle of the safe havens here. Look at this. I mean, this is spectacular. Swiss franc is really, really strong. It's really picking up interest. The Japanese yen is also one of those safe havens, but it's losing its battle right now to the Swiss franc. So the Japanese yen finding some strength a little bit right now, as you can see. But look, as long as we stay somewhere above this downside line, I will continue targeting the upside. So Let's have a look at the USD CHF again. I mean, look, if you're trying to find some sort of good grounds here, I need to look at the other chart with more data. Let's have a look at the trading views. Yep. So look, I mean, this is just wow, spectacular. We stayed below this area, below the 0.8333 zone. On the weekly chart here, you can see that, yeah, we stayed below it. I'm really interested to see what's going to happen with the monthly. And so far, I mean, this is just, like I said, is just pointing more and more to the downside. We have some good areas here, but I think that the next target could be this 0.7850. I think this is it has been a good area of support. We had a few breakouts, yes, but generally has been a good area of support. So I think that this is something that we could target, the 0.7850. I know it's a lot, but hey, with this tendency, this is just, yeah. I mean, we're going back all the way to 1971, and this is where it's going to be interesting to see if the lowest we have ever been historically, apparently, well, at least from all the history that I have here, has been around the 0.7070 zone, where the US dollar was against the Swiss franc. So later on, don't get me wrong, it will present itself with a nice opportunity, but at the moment it is just wow. So I think that there could be some more downside on this one, and let's not forget that. Let's not forget at the moment, yes, we're struggling. The U.S. dollar is struggling to find good grounds, but it's not going to stay like this forever. I mean, eventually somebody else will, will be able to save it in a way, or maybe the same administration. Who knows? Let's see. For now, I'm still leaning towards the downside, and looking at this chart right now, I mean, I am just very interested at a later stage at this one, because again, this could present itself with a nice opportunity to the upside. At some point, we will have to push above the 200-day EMA, but when will that be the case? I don't know. I mean, the psychological one level, that's something that we all, I remember, we're watching carefully, the parity. We have been there for a while, but now it's it's not going well here for the US dollar. Let's have a look at the Euro USD. So of course we're watching the ECB today. We're watching the ECB on Thursday, but before that, on Wednesday, we're going to get the European inflation numbers, which we need to very carefully monitor. Like I said, the current expectation is that we're going to see a little bit of a decline in the rates, in the inflation rates. So that, of course, is a perfect cocktail for the ECB to continue cutting rates if inflation still remains on the lower side. This could force the Euro USD here to decline a little bit, maybe that, which I would call a correction back down. So we have approached the key area of resistance, which I talked about previously. This 1.1483, 1.1495. Look, in general, I'm watching that psychological 115 zone. If we can clear the 115, I'm getting more comfortable with the upside. But again, let's not rush into things. Oh, excuse me. Oh, excuse me. Let's not rush into things. Messages from deep within, because we had a good run. The US dollar will stabilize a little bit at some point, just maybe for that little correction. The same story could happen with the Euro USD in that case. We could see a little correction, but I will say it this way: as long as we stay anywhere above this downside line here, taken from the highest point of July of 2023, as long as we stay anywhere above that area, I'm still bullish on Euro USD. If we start falling back below this downside line, then yes, great. More sellers here could join in. EURUSD, let's have a look at this one. After a beautiful rebound from this downside line, we're still pushing higher, or at least trying to, maybe without much enthusiasm. However, we remain above all my EMAs here on the daily chart, so in a way that's kind of pointing more towards some higher areas. Now then, again, given the fact that the Japanese yen is seen as a safe haven and is currently enjoying the moment of strength against its other major counterparts, again, because it's a, it's a safe haven. Still, at the moment, it seems that the euro is actually taking that part. Again, I think that that's temporary. However, let's ride along. Let's see what's going to happen next and how far the euro can strengthen actually. So that's what I'm saying. So if everybody's thinking that the Japanese yen is the the go-to one, it is in a way, but again, it depends on against which currency. In this case here, for now, the euro seems to be showing good resilience, and let's see what the ECB says on Thursday. But for now, if they will say that they continue to support the economy, they're willing to do more cuts, then of course, yes, I mean, of course it's not going to work out well for the euro. However, at the moment, like I said, at the moment, the fact that the US dollar is on the sleep on the I don't know, not I wanted to say on the sleepy side, but no, it's like on the downside. It's that's why it's helping the euro here to remain on the stronger side. Euro Aussie, very quickly. Yep, my roller coaster ride here. I love it. But I'm loving another thing here is that we remain below the 1.8121 zone here. So that's the highest point of March of 2020. That's when the big shakeup in the market happened before COVID. So yes, we surpassed it, and now we're pushing. No, wait. I'm wrong. I'm sorry, I'm wrong. We surpassed this. This is 1. The highest point of is 1.98 zone. Right there we go. What am I talking about? This is the highest point of April of 2020, where we're currently sitting below. Now, again, we're seeing extraordinary times right now, and this pair actually is showing us exactly that. So Australian dollar is the risk currency, commodity linked currency. So it is basically benefiting when we have risk on environment. But at the moment, we're kind of not seeing that, and I think that we still have shaky moments ahead of us. So I could expect this one to push further north, but at the moment, I'm playing the cautious game here. I want to see what's going to happen with this 1.8121 zone marked by the highest point of April of 2020. If we can stay above it, I'm going to lean a little bit more towards the upside again. Euro CHF, I mean, of course, this one, you see, that's what's on. The Swiss franc is the strongest one. Yes, we're seeing a little bit of a retracement, but at the moment, I think that there's still more downside to come. Euro GBP, of course, pushing higher, that's fine. I don't like this pair. But, okay, look at this. I mean, this is quite an interesting move. So I think that maybe this is the next target, could be here on this pair. Again, I don't like it because, again, it has a mind of its own. It does move. It's not very technical. But okay, some components might be technical, but some it sometimes to me sees sometimes it just to me it just sometimes sees that or looks that it's a more of a, honestly, like the words are like mixing today in my head. It seems like that the big picture might be on the technical side, but the shorter ones are more reminding me of a random walk moment. Ladies and gentlemen, and finally GBPUSD, and we have inflation from UK, and that's coming out. Let me just remind myself. We have the job numbers coming out tomorrow, and the inflation numbers. I think inflation numbers are coming out on Tuesday. So keep your eyes on that one, ladies and gentlemen. At the moment, the expectation is for number to be the headline number to remain like a little bit on the lower side here. The core is also on the lower side. So look, for now, everything is expected to be a little bit on the lower side. So I want to say this way that if that's the case, if we come out lower, maybe we could see this pair stabilizing a little bit back down. So let's see what's going to happen. Let's jump into the commodity world. Gold, ladies and gentlemen, honestly, like a new all-time high this morning. Again, last week it was 3,245 here, a little bit higher. So we overshot by just a tick. Look, I would say this way. First of all, I want to get rid of everything and start fresh. I want to bring some key important levels here in the table. Like, for example, this highest point of, or should I say the high of the April 3rd, near the 3,167. Now, this area here is an important one, in my opinion. If we start falling somehow back below it, I'm leaning a little bit more towards a larger correction back down. Yes, I understand gold is the the safe haven and everybody jumps into it when the markets are down, but again, as I repeat myself several times and about this, I will say it again, and I'm going to stand my ground that whenever times go rough, you need to unwind a little bit of gold, because again, you need some cash, and why not to do it when it's at all-time high? Because you know that you will need to pour money into the economy, and yeah, that's why it's very important to just keep track of it, of course, to see how everybody's doing. But as you remember, this big decline which we had, this was also because of the stock market declining, and this is, like I said, that's why fear kicked in into gold, and everybody was shocked why the hell gold is drifting lower when it should have been pushing nicely to the upside. But it's exactly what I'm saying to you right now. Again, countries do need cash when the times go down, and tapping into their gold reserves is one of the options. Now let's jump into silver very quickly. Silver is, it's pushing higher. It's trying to make its way back up here. At least it popped back above my target here, the 30.83 zone. That's great, wonderful. We pushed back above the 200-day EMA, but we're currently getting a hold up near the 50-day EMA. Look, if we continue to climb above the 50-day EMA, I'm just continuing to target the upside. But the thing is that at the moment we're testing this upside line from underneath, so I'm not going to be surprised if something like this kicks in as well. So, yep, long story short, this is what I'm keeping an eye on. If we do pop and stay above this upside line, the broken upside line, then I'm going to lean a little bit more towards the upside. Copper, yep, similar story, rebounding, that's fine, but again, let's not rush into things. At the moment, this could be classed as a temporary correction before another possible leg of selling. Now, oil. Look, I did a piece on oil, and it was last week, so the name of the post here was WTI gets a boost, but is this really enough? And you can look at that one, but just to briefly mention that look, let's put it this way. As long as we stay somewhere below the $65 mark, I'm still bearish on this one. I don't believe that oil can retrace, higher with all the current uncertainties, unless those uncertainties kind of calm down. If they don't calm down, I don't see, the oil pushing nicely to the upside. So yeah, natural gas. Let's have a look at this one very quickly. Natural gas. It's approaching my 200-day EMA. I'm looking at this daily chart, and I want to see a drop below the 200-day EMA before getting comfortable with further declines. Coffee, let's have a look at coffee. It's oscillating around the 100-day EMA, so not much is happening there. Sugar is continuing to slide, so far so good. And cotton, one of my favorite commodities here. Cotton, look, we're seeing we had a good run at the second half of last week. Actually, you know what? No, from the whole week we had a good run during the whole week, and we found good resistance near the 100-day EMA here on the daily chart. We're seeing a little bit of a retracement. So I'll say it this way: as long as we stay above the $65 mark, I'm going to continue targeting the upside. If we start falling below it, well, I'm leaning a little bit more to some lower levels. And finally, for dessert, as always, crypto world, Bitcoin. Now with Bitcoin, now look at this. We have managed to stay above this hurdle, this 76,600 zone. And we had a few breakouts here, but in general, overall, it remained above it. And we cleared the upper side of this falling wedge pattern. My only problem is that these EMAs are providing strong resistance. So if you're looking at some higher levels, then wait for a break above this this territory here. If we can break above that territory, great. I'll go for some higher areas. So that's what I'm going to do. That's what I'm going to keep an eye on. And I do like this 94,800 zone, and I do like the psychological 100 area as well. So I will say this way, I'm not getting way too bullish yet, but I will, of course, consider that option if we continue, if we actually overcome my EMAs here on the daily chart. If we don't, if we start falling back below the 200-day EMA, I am leaning towards the downside. Let's jump into Bitcoin Cash here. It had a great run. Look at this, spectacular. We talked, I said it several times, and I'll repeat myself again. I do like Bitcoin Cash. It's nice. If to put it in simple terms. But look at this. I was talking about this 272 territory. I said if we're going to remain above this, I'm leaning towards the 320 zone. Boom. Then I said if we clear the 320 zone, I'm leaning towards higher levels, but I should have said that, you know, I'm aiming for the 200-day EMA. But okay, my next target was here, the 355, but, you know, that's fine. I don't have a crystal ball. And now what we're seeing here is we're seeing a retracement, but I'll say it this way, as long as we stay somewhere above the 50-day EMA or at least 320 mark here, then I'm going to continue aiming for the 200-day EMA again. For me to get comfortable from there, a break above that 200-day EMA is required. Ethereum, it's a little bit on the modest side, but hey, it could be interesting later on. Let's see what's going to happen here. But we have a problem with this downside line taken from the highest point of December of 2024. So yep, keep your eyes on that one. If we clear this downside line, I'll go for some higher levels. Ripple is pushing higher, and we're currently oscillating around the 100-day EMA. And look, I would say this way, for now, this downside line is something that I'm watching very carefully. The highest point of January, yep, it's an important one for me here. But I would say if you're looking for some higher areas, we would have to wait right now. I mean, maybe a push above the 50-day EMA could do the trick here, but it's very tight. Litecoin, this one's I like. I'm loving it. Look at this beautiful rebound from this territory from the 64 mark, and we're pushing higher now. So hey, what can I say? It's a good one here, but I want to see what's going to happen next. I want to see if we're going to retrace back down here. For example, we broke the downside line. That's great. That's the first positive step, but what I want to see here is that if let's say we do retrace back down, we find support somewhere above the $70 mark, and then we push higher. Now that could be, like I said, that could be quite an interesting moment. Dogecoin, I'm not so keen on it right now because again, it's purely political. And there is one guy who's no longer very popular, and he loves this crypto, but he's not very popular anymore. And that's why maybe there's this stigma against this crypto as well. Let's not forget about that. Polkadot. Now this one's interesting for me, and we're not, we're struggling to push back up. However, there is still a chance. So look, I will say it this way: as long as we actually, you know what? It's really time to get rid of everything, and maybe bring back some lines again. So. The positive side is that we pushed back above the 3.57. That's great. So I'll keep that one on the chart. But if we do start falling below the 3.21, 22 zone here, I'm going to lean a little bit more towards the downside. But for now, it seems there could be a chance for the bulls here. Let's see what's going to happen. Let's see if we can continue to trade above the 3.57. If that's the case, then yes, I'm leaning towards some higher areas. Ladies and gentlemen, that is a wrap. That is a wrap, and I want to thank everybody for watching this one, and I really, I hope you enjoyed this. Thank you very much for all your, your support, in general, for your likes, for your views, and I really want to say that, big massive thanks to you. So, ladies and gentlemen, as always, I'm going to finish off the session, but I just wanted to remind you that there's not going to be a session on Friday and on Monday. So tomorrow I'll have my last session for this week, and then we'll resume on next Wednesday again. So ladies and gentlemen, as always, Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you tomorrow. Wednesday. Wednesday, 7 o'clock GMT time. Bye for now.